Alrighty, what is up, guys? Welcome back. June is over, and as always, as I always start these videos, this is gonna be the June recap. Um, Before I even get started, I want to just make a note. If you're watching this real time, I'm filming this on July 3rd. Um, July 6th is the last day to get access to a webinar that I will be hosting. All you have to do is purchase a shirt through Kejo. A very close friend of mine started the company, started the new brand, and so I'm helping him out, selling some shirts. I personally own a shirt myself. I posted a tweet on it about it, what it's all about. I'll maybe link that in the description below. But if you get a shirt with the code KYLETRADING, you'll be into the webinar that I'll be hosting. You'll get an email from me. Also, you have a chance to win a slot on the Twist podcast with Matt, Jack, and I. So if you're watching this after June 6th, no big deal. This is just time stamping it for now. But if you are interested, feel free to get a shirt, join the webinar, and ask me any questions you want about my trading journey and so forth. And yeah, so anyway, let's just jump right in. June 2021. A huge lesson in that you're gonna wanna push it when it's there and take a break when it's not. And I think this is a lesson for traders to learn many years in. I don't think if you're learning it, if you're watching this video and you're only in your year two, maybe even year three, this isn't something you can maybe learn right away. Because I think the first 1 to 2, 3 years is like really finding your base, finding your strategy, finding consistency, um, and something that's the core of consistency is just small gains, right? Small gains add up, taking singles over and over and over again. Um, and I think as you start to take more singles, you start to learn which one of those singles you could have pushed to more. You start to learn which one of those singles were actually some of your best and favorite and most profitable trades. And so then coming into year three, year four, year five, I think you really start to gain that experience where, oh, I can push bigger size on this play. Like, oh, this play is like my favorite setup. It's the highest odds. I have the most conviction. I'm willing to take the biggest risk, and I want to push it, right? So that's kind of, I think, where I'm really developed the last year or so, where I still have consistent gains. I still have a lot of singles, a lot of good wins. But when a really great play comes around, I push it, right? And that's exactly what happened in June with AMC and BB and all the meme stocks that I'll go deep in detail to. But essentially, like that was my first week, right? My first week, I just really pushed it with how great these plays were, locking in my best week ever of $243,000. And then just taking a quick glance at the next few weeks, I am green over these next 4 weeks, just to say. But in comparison, right? I mean, I made an extra like 6 grand, right? So it's I guess after borrow fees, right? An extra 6 grand. So nothing, still 6 grand is great. I'm not knocking 6 grand, right? But in comparison to what I just made the first week by pushing it, and then in terms of energy and time spent the next 4 weeks, like clearly there's a difference there, right? Um, so we'll go into that, and that's just pretty much going to be the theme of this video. Um, so right, let's get right into it. Week one, of course, AMC, BB, the meme stocks. So if you're not familiar, right, all the meme stocks, AMC, BB, GME, Express, COS, KOSS, all of them ran huge in January, right? There was this movement of Wall Street bets sticking it to the man, like getting rid of naked short sellers, short selling in general, yada yada yada. Um, a lot of them actually held up their gains. AMC was one of them. And kind of the theme of AMC, or I shouldn't say AMC, the pandemic ending, AMC theaters opening back up, right? There was this, and short still being short AMC. There's another huge Wall Street kind of surge. Well, it's not Wall Street bet surge of like, let's squeeze GME again, right? And that's exactly what happened. Um, and so a keynote is I actually made money long on this. Um, I mean, I never make money long on Nasdaqs, but this particular day right here, you see how this red day, so a few green days and then a red day. And if you know how I short sell, if you know how most red days work, usually a second red day follows a first red day. So when we had a red day here, I wasn't short overnight, but I had the anticipation of telling myself like, if we go red again, I want to get short again. Now I didn't short again the next day. Why? Because it gapped up huge. And if you know how history like doesn't repeat itself, but it rhymes, you look at something like GME back in January, you see a few green days run a red day or red candle. It actually closed green this day, but then you see the next day it's not another red day. It's actually a huge green day. So anyone who shorted and stayed short on this day ended up getting squeezed this day. And then what do you know, the next day, a mother of all gap ups because everyone who was shorting too big or shorting too much or got too aggressive just got blown out of the water. So again, history doesn't repeat itself, but it rhymes. So not in January, but then 5 months later into June, here we are again, right? Same similar candle. Next day, not necessarily as much of a range, but a huge gap up. So anyone who shorted overnight here really got screwed and was like, oh crap. And so I saw that. I was like, you know what? I'm going to give this a shot. I'm going to give it a chance and long it in after hours. So I got long with that idea that it would squeeze because that's really when the biggest move happened for GME, as you saw on that daily chart. So I thought we'd see something similar to AMC. Now, unfortunately, I can't go that back this far, but it did start squeezing. I got long in like the low 30s. It closed after hours, I believe, at like 38 or so, somewhere in the high 30s. So I was like, great, I'm already in green. This is gonna have gap up huge. Let's see how it goes. Now, out the open, the low here on this panic is like 35, 36. And if you go again to the daily chart here, the previous breakout of this red candle, right, this high, is like 36, 37, right? So I immediately noticed out the open that we're holding the mid 30s level pretty well. And I only took 1,000 shares, so I realized, 1,000 shares for me in terms of a long position isn't the most is bigger, but it's not that big. But I guess for listed, it is big. So I was looking to sell in pieces. So as we go here, so we held the breakout level in the mid 30s. I remember telling myself I want to see if this can go get at least over 40. I remember selling about 2/5, about 400 shares of my 1,000 shares up in the mid low 40s here. And then I remember thinking to myself, like, if this is going to squeeze like GME squeezed back in January, we got much higher to go, right? And so I did lock some in because the last thing I do would be to hate to not lock any in after having such a good trade work for me and then give it all back if it actually failed. So I don't regret locking some in here, but I remember very happy that I held some and said, let's stay patient, right? And so I just gave it some time, let it consolidate, started breaking out the new highs, and remember selling pretty much all of it into 50. Because 150 is a psychological number. Two, this speed up here looked pretty intense to me. So I was all out. I made like 14 grand in this long. But then as you can see here, then we really speed up. Right, we go over 50 straight to like 62. We actually pull back, and then we go do it again all the way to 72. And this ended up being the top of the day. I do have a few shorts on this one. I don't have the entries pulled up right now, but I do remember shorting, these lower highs. I remember taking small starters into the parabolics. But again, that's a very risky strategy that definitely opens the door to bigger losses. So it's not something I like to do as much. What I really like to do is short that next lower high after the first huge crack, like here, and then also right here, because each one resulted in a secondary pull. So I made a lot of money on this day doing those lower high shorts. But the big money maker, the one that really made the majority of my week, was the first red day. So let's go into the trades here. I believe I have it. So this was BB. I'll go over BB after AMC. So here's the chart. Let's see, make sure you guys can see it here. Is it big enough? Yeah, here we go. Cool. So in pre-market, we were gapping down again. First sign of weakness. The fact that we had gapped up huge. Like I said, I was long over that gap up. So the fact that we're gapping down the next day and we had a huge blow off parabolic to 72. Again, all the signs are coming together. Like, okay, now we're due for even a bigger pullback. Got short pre-market. We pull right out the open here. You see this little small pull. Let's go zoom in. This little pull. In hindsight, I wish I'd covered some. I really wish I did. The problem that I have is when I know it's going to go much, much lower, I have a difficult time covering and locking some in on the first pull. And knowing this is AMC, knowing how much volume there is, how many players are in the game, how many shorts are getting squeezed or looking to short, thinking that this was just going to pull and not bounce at some point was a little bit naive of me, right? And so that's why in hindsight, I wish I did cover because it's like the odds of a bounce were also very high. And I kind of ignored it. I was like, no, let's stay short. Like we're going to go lower. And we did go lower. But that wasn't until we had this huge squeeze, not huge squeeze, but big spike right back to red green. And so if you look at my trades here, we actually start halting up. and if you look at, if you watch level 2 long enough, especially on if you watch DAS or use DAS, which is the software right here where I take this picture, on DAS, you can start telling a stock's about to halt up by the way that level 2 is like the bids and the asks are locked in place. They're just locked, and transactions are going through, but it's locked in that place. And if it locks enough, it's just going to halt. And so I saw that happening, right? And I'm short, and I'm like, holy crap, it's going to halt up. I'm going to get squeezed out of my mind. So I cover. You see this little green candle? I cover to the halt. But the key thing, the difference is you immediately see me reshort, right? Another red candle right there. And that's because it actually didn't halt up, right? The bid and ask locked. I covered, and then immediately it unlocked. Like it started selling off again. So it was a huge sign for me, like, oh, it's not going to halt up, right? And when something fails to halt up, that's like, so when something's about to halt up, it looks very, very bullish. Like, holy crap, this is going to squeeze. But if it can't, if it almost looks like it's about to halt up and then all of a sudden it doesn't, that like completely flips it from super bearish to super bullish to super bearish. So when I saw that it failed to halt up, I immediately knew I got covered at the worst time. Like I knew I knew it needed to get reshort, so I immediately reshorted. Luckily, I filled the same size, pretty much the same average, and before you know, we just collapse. Covered a small piece here, just in case it was going to bounce again. Learned my lesson from not covering any of that bounce, and then covered the rest into this pull. Now, I'm a little bit disappointed I didn't cover more lower, but this was a pretty unique situation. If you were trading back in January and February, especially with E-Trade, there were like so many participants and so much volume in these stocks that a lot of softwares besides just E-Trade, were like lagging, right? You had your level 2 was lagging, your orders were lagging. There was just too much traffic through the exchanges, through your brokerage, that you just got a delay. That was the case for AMC on this particular day. It was just so hectic that my DAS was lagging, and so when I thought the level 2 was turning, when I thought we were due for a bounce, it was just I just getting lagged. I just saw a lot of laggard data. So I don't mind these covers; they're still good covers. But right when I covered is when the lag stopped, and before you know it, I see this thing like down $5 or $10 a share lower. So not a big deal, but with the size I had, I mean, if I just saved even a quarter of, of my shares, it would have been a lot more money. But again, I made a ton of money anyway, so no big deal. And then again, similar to how the higher low short on the parabolics the previous day, this is now like the first bounce short for the first red day. So I did short all up in here towards the view up of this yellow line, covered it into this next pull. Unfortunately, again, I underestimated again. We actually pulled all the way to a new low a day. Didn't take part in any of this, unfortunately, until this bounce. You see this bounce here, and again, it's failing view up, so I want to get short. I think we're going to fade back down to the low 40s, if not $40, maybe even the low a day. But then they put out a PR saying that our offering, our ATM is over. And that's kind of what started the gap down. The gap down they put out, they had I don't know if it was an ATM, but they had an offering. Because the company is just taking advantage of the stock price being so high, they need cash, selling some shares. Because there was so much volume, like they finished the offering by midday, and they put out a PR, so it's squeezed. I immediately covered. I was like, oh crap, like that's not good. So I covered. I gave some gains back. But then I also thought to myself, like, we're also so underwater. Like, there's so many people underwater from like the 70s and the high 60s from the morning. I questioned how strong it could be. So that's why you start seeing me reshort. And then I start covering the dips, mainly because I started second guess myself. Like, okay, yeah, there's a lot of volume. There's a lot of people underwater. But they just finished the ATM in one, and not even a day, in half a day. Like, they're done. Like, there's that much volume on this stock. So I immediately realized I probably should cover this. Is probably going to go higher. So glad I did. I mean, I literally avoided even a bigger squeeze back to green. And when it went back green, I thought we were going to like 100. I thought we were going to break the 72 highs from the day prior. I thought it was another huge trap for short sellers who got too stubborn. I was like, holy crap, this is insane. So as you can see here, I didn't short. I was scared. I thought, I mean, I could have, rationalized and got it together and stopped being like too scared. And once it failed right here, this big fail, it could have been a really good short. But again, I was just after, giving some money back and then kind of making a little bit back here, thinking it was going to trap everybody and go to even higher. By the time it failed, I already psyched myself out. I was like, I just don't think I should be reshorting. I'm going to play it safe. And that was that. So that really resulted, besides that, let's go on there. BB was same thing. Like BB, let's go to actually the daily chart on stocks to trade here. Same thing, right? BB ran huge in January. It ran in sympathy with AMC back in June. And so I, again, was looking for the first red day. And what was cool about BB is that when AMC was gapping down and getting crushed, BB was gapping up. So like there was a huge inefficiency there of like I can get short on BB at a much higher price while everything else is dying and getting and crashing. So on the trades here, you can see I get short, um, and this is where being aggressive in certain situations is warranted, whereas other times it wouldn't be. So because you can see here out the open, I mean we break the pre-market high of that level, and normally I would cut. Normally I'd be like, oh, this is going higher. But because again, the inefficiency I talked about, like this is when AMC is like getting crushed, right? AMC is gapping down. It did have the halt up, so that's why or the attempt to halt up, which is why it probably spiked. And if it did that, then I would have cut BB. But because then AMC didn't halt and crashed, right? I didn't cut BB because I was like, BB is going to follow AMC. It might be delayed, right? Because it's just a laggard, it's a sympathy, but it should and will follow AMC. And so as you can see here, like we crash, BB still wasn't red in the day, so I didn't cover any in here. I was very convicted. I was like, BB should be going red. And as you can see here, I still didn't get the hold to red. I held to red green, or green red, which is cool. But again, I didn't cover any here because I was like, this is for sure going red. It just would have been nice if I had covered in actually red, like stuck to my thesis. So still a great gain, still a huge winner. Again, didn't re-short any of the bounce. I kind of just took a more, when you make, what is this day? This is the day I made 150,000. Like when you make 150,000 the first half the day, I don't really feel too aggressive after that. I kind of gave it all I got in the morning. So yeah, that was the two, that was that week. That was me just really, really pushing it. New best day, new best week. I couldn't have been happier. Going into week 2 though, week 2 was way, way rougher. And it was way rougher way more rough because it shouldn't have been this bad. I mean, I remember being up 20 grand almost every single day, unrealized at least, right? So when it's unrealized, it's not fully locked in, but being up that much and then screwing it up, whether giving it back or taking other losses elsewhere, and then kind of only having these kind of a days and then resulting in a red week. I mean, I was so burnt out. I was just really, really screwed up in so many ways. And that was because I started taking the approach of trying to swing and then trying to day trade at the same time. So if we go to like the daily chart, and this is mainly from AMC. So if we go to AMC, if you know how the framework works in the penny stocking framework, we have a huge supernova, we have the pullback, we have a bounce, and then we have a short bounce opportunity. So when we bounced here, I thought to myself, we're still, we're up from 16, 15 bucks. We're still at like $50, $60. We are due for another big pullback, maybe even below 40. I thought at least 40 would be the minimum, and we ended up getting there, right? Of course, we did over 3 days. So I wanted to try to, I had this picture in my head of like, it's going to happen over a couple of days, and I wanted to swing. So every single day, I'm like trying to swing, and in the morning, I'm up huge because there's like big panics and I'm up big. But then by the afternoon, something happens where the stock comes back. There's like a midday spike that chops me out, and I just lose sight of the big picture, right? I let the shorter time frame on the intraday kind of get away from me in terms of again keeping that big picture swing idea. So again, every morning I was up huge. I mean, this day, again, I remember shorting once it failed here in these pops, panicked super huge. It was up big at these lows. Got super faked out on this little perk here. I mean, it's such a small perk, but it just broke the highs just enough. And I was like, dude, like I don't need to give any more gains back. I think why is this thing coming back? And as you can see, I just ruined it. Like it just should not have covered there. Like when you swing trade, you should have a way wider stop. And I kept moving my stop down as if it was a day trade. And again, if it was a day trade, I would have covered it all in these morning dips. And it would have locked in way more. Same thing the next day, because I psyched myself out here, I didn't short overnight. Again, gap down huge, re-shorted in these pops, nailed it again in the morning here and here. Like again, it was up big. Late day comes back, has a huge squeeze. I'm like, screw this, I'm out. I do not want this to go over highs. Psych myself out again. And again, this is also similarly because of GME. GME was also running in this time frame. So like, because AMC followed GME so well in the early January, earlier in the year, it tried following GME again this time. And so it was very conflicting where there was a setup and a thesis that I thought AMC should go, which was that bounce short and that fade. And then there was GME going up, right? So there was many times in many cases where AMC was squeezing, like this time in particular, because GME was going up. And so I got super frustrated with that. And it just didn't make a lot of sense to me. And so when that happens, I feel very unconvicted. I lose all conviction. I lose all, like, thesis just goes out the door. And so I just covered. I was like, I can't handle this. Again, after all these days of just screwing it up, I just couldn't do it. And then so we see this thing fade. And again, this just like, again, it every morning, every day after that, it just kept confirming I was right. Your thesis is right. Your thesis is right. And so finally, again, I still had conviction it would go to low 40s. So again, another gap down day. I was like, this has got to be it. And this is also the day that GME put out their earnings and they were gapping down huge, right? This is the day that they had this gap down and they got crushed this day. So the fact that AMC was gapping down too, it was finally a time where I had thought, this is where finally GME and AMC can move in unison instead of moving in opposite directions and them trying to like follow each other when AMC is going down and GME is going up. Now both stocks can now go down like together, which should create like the best short in my opinion on this day. Of course, more randomness happens, like GME just tanks out the open, and as you can see, AMC actually spikes. And so I got super aggressive in the morning because I thought, for that reason of like both should follow each other for the first time this week. And of course, the one time I think that AMC does the opposite. Now GME is going down, AMC is going up. And so I get crushed, I get squeezed, I lose like 30 grand in this morning. And just nail in the coffin, like from all these days prior of getting exhausted, giving back, 5 figures almost every single day, to then losing 5 figures. I mean, I had enough. I was like, this is just ridiculous. And then you can see my trades here. Let's go out of here. And you can see how ridiculous I get with just how many freaking entries and exits I have. Just ridiculous. If you know how I trade, I like it very smooth. I like it very I pick my spots, like to pick my spots very well, not like just getting in and out very frequently. But as you can see here, like this is a mess. All up in here, just losing way too much money. Finally, I realize AMC is actually finally it's following GME, right? It was for whatever reason, I'll never know why, it just had some strength in the morning. But once it failed, then I was like, okay, this is actually going to fail. I actually should be getting short. And as you can see here, I do get short. Again, way too many times, way too many entries, way too many exits. I should have just gotten short and held. I would have covered like a third here, and then one more third there, like how I like to do it in pieces. Would have been so much more smoother. But as you can see, I'm just in a train wreck at this point. So luckily, I did make money in the whole second half. Like after this morning, I did make money on all these shorts, as wild and as scary as all these entries and exits look. I did make money, money back, I should say. Lost 30 grand in the morning, made like 20K back and all of this madness. So lost 12K on this ticker that day. And again, big picture is a big deal. No, I made, again, almost $250,000 the week before. But as you can see, like the emotionality of me giving back so much money every single day and then taking the biggest loss of them all on the day it worked the best, right? Because again, I had a thesis. Like if we go to the daily chart, I had a thesis from the high 60s. Like when this bounced, I was like, this is going to pull to at least 40. And I mean, I nailed it. Like it literally went to 40. Thesis was perfect. Trade execution was terrible. So really, really tough there. Did that a couple times with BB as well. Same thinking, like I thought this bounce was gonna. Again, you see these three red candles. They followed the same three red candles this day, and the same mistakes I made in AMC, I made the same mistake on BB. So very, very frustrating. What should have been probably like a 50K, 100K week turned out to be a negative 9K week. And reason being is on the 11th, I actually had a swing. So I've been getting into more, not swing trading, but more sector swing ideas. Mine being one of them, because mine was a mushroom company, and they put out some PRs about crypto. So they're very, very fluffy, very PR-y. And I thought I had an idea of like, let me get long and like wait for the next crypto run, wait for the next like mushroom run, and I'll profit, right? Unfortunately, I had a terrible average. I got way too high of an average up in here near 1 cent, which is dumb to think because I totally forgot that I just totally ignored that OTCs when they're not hot, they're just fading, right? It's best to just wait till they get hot again than try to be early. And so clearly you can see that didn't go well. And then they were actually so scammy, they got halted by the SEC. This is actually my first time I got halted on the long side. I've been halted on, or I've been short, which is perfect because like the stock would reopen to a 80% gap down. I'd cover my short for a great gain. This was the opposite where I was long. It happens, I've seen other traders happen to them too, so it's shitty, but that's what I get for trying to learn the new strategy of swinging some of these lower price OTCs. Luckily, I only had $10,000 in the entire trade, so losing like 80% on my long after a gap down. Lost like $8,000. So again, in terms of dollar loss, not that big considering I lost like $12,000 on AMC the day before. But just to add insult to injury on the week, it took me red. So again, not a big deal. Like this week, I think is my biggest red dollar week from a week standpoint. But again, from an individual trade, from my worst day ever, it was nothing. Right, I was still up massively on the week or on the month. So I brushed it off. Like I just needed a break from all the emotionality of AMC and really misplaying it until we move on. Week 3, not a whole lot. I mean, again, this is where like the consistency came back into play of just getting singles. Came out to 11K week. Some of the trades that I think stood out the most though were the ticker is MMAT now, but it was TRCH. And I really screwed this one up too. It was a good single trade, but it was, again, another opportunity where it could have been a really, really big winner. I just screwed it up. So we'll go over that, how I did that. Again, super extended. I mean, from 6 to 12, and then pulled back one day, and then went from 10 to 20, almost 22. If we go into the intraday here. And the reason why it was so good is because they had an ATM. Similar, again, to why GME had its first red day. TRCH here put out an ATM. They finished one ATM and they started a new one. And so that's why you see this huge crash pre-market. You see why we couldn't go higher the next day. And so I want to start getting short. And I think I have my entries here as well. TRCH, yep, here it is. So you can see me getting short, being aggressive. And then we spike out the open. Or not out the open, but we spike after going red. See how we pull here, and then we spike again. And I cover into this, and it's a huge fake out. Super frustrating. And the reason why, and again, you might think to you might ask me like, Kyle, well, why didn't you cover into the first pull? Like same similar idea to AMC. Why wouldn't you have covered in the first dip thinking it might bounce again? Because AMC did the same thing. Reason being is because the ATM on TRCH was huge. I think it was like 100 million. So if you're trying to sell $100 million worth of stock, I mean, that's a lot of shares. And on most ATMs that I've traded in the past, I mean, they gap down huge. Like they're way lower than they already are. And they're way heavy. Like the price action is super heavy. The price action is super just not bullish at all. And so when I see it spiking, I'm like, something is just off. Like, why isn't this isn't nearly as heavy as it should be, as I thought in my head. And so I covered. I just couldn't, something was off. I didn't know what it was. I didn't know, like, I didn't know. I just couldn't wrap my head around it. So I did cover, took a loss, reshorted, covered some again. And then finally I kind of get it together where I say, okay, like there's a lot of selling in the 10 area, clearly as it stuffed me. And clearly now as there's a double top here, there's a nice double top in the low 10s. So when we spike again, I short some more, which is why you see this here. Now this was like the last straw. I mean, if it started breaking over the highs, again, I would have covered. But again, you see me covering into this dip here. And that's just because, again, the whole reinforcement of like, I thought, the ATM on this ticker should have made this so much weaker, right? Like, okay, it had one spike and it failed. Great. But to have another spike like this, even though I did short, I started second guessing again. I'm like, why is this spiking again? Like this should be so much weaker. And so then you see me here, I'm holding short, it fails, I'm like, good. And then we start spiking a little bit more, right? We get over this, we kind of had a little top, a couple mini tops here in the, the 19 area. And then we start perking again. And we have just a, it's not even that much volume in hindsight, but in the moment, I was like, there's so much, like it's perking up again. We're going to have another one of these squeezes. I was like, get me out. Like this just is not, the ATM is just not doing its job. It is not working the same way I thought it would. Just get me out. Of course, that was a huge fake out again. It was under VWAP. It was under the low 10s. Like there's no reason in my head, in my mind, in hindsight, unfortunately, why I should have covered here. Now I do reshort, which is cool. But again, if you haven't noticed a trend here, this is what happens when I psych myself out. Even if I reshort, I've already lost the side of the thesis, the side of the plan. and I start covering too early, as I did on AMC that one day. I was all hectic. Same thing here, right? I covered all into this wash up, and then we just see it collapse. And it's like finally the ATM kind of started playing a role. Like finally the ATM caught up on itself, and the selling receptor pressure really started. And again, with the ATM, my thesis, right, in the morning, my thesis was like, this should go down. I think they did a reverse split because it's not this high. But let's go back to the charts because it's easy. In my head, I'm like, this should go to at least $8, at least $8, right? And so, and as you can see, I cover all of it before 850. And so it goes below 8. It actually stays even weaker. It closes below 7. And again, looking at the daily chart, I thought to myself, like, it's too oversold already. Like, yeah, the ATM eventually worked, but I think this should bounce. And what do you know? We gap down even more and we go even lower. So, would I've caught this whole move? No, I told myself like $8 would have been the nice cover area. But again, having the size I had up here, because again, when I reshorted, it was much smaller size. So having the size I had up here and having, stuck to my thesis of covering near 8, I mean, it would have been easily a 5-figure trade. This turned out to be only like a $3,500 trade. Again, not knocking $3,500, but from a trade plan and thesis standpoint and trade management, kind of really dropped the ball here. So it happens. Probably maybe a still laggard of emotions from AMC the week prior. Good to be green, but also I gotta improve at some way, shape, or form. And so because I didn't really let the thesis play out, I'm gonna remember this trade. And that was kind of the theme because I have another trade that I'll go over at the end of this video that is very similar to TRCH, which is frustrating as well. Another one is Fannie Mae. So Fannie Mae on this day, this was it that day? Yeah, week 3. So TRCH, it was like one of these 2 days. Fannie Mae was this day where I lost $5,000 because of dip buys have just been really tough. And some of you are watching this, I know you know what I'm talking about because in January and February and March, dip buys were really easy, really smooth, and I made a lot of money off them. The last week or so, 2 weeks, maybe this month, a lot of dip buys have been super, super tough. The bounces have been much different in how they go about themselves. So of course this does eventually bounce, but trying to buy like the level 2 turns in the panic, like it just hasn't been working. There's been tons of fake outs. It's much, much better to like wait for the fake outs to kind of finally end themselves and then start to get long for like the more slower grind, which is what this was. So yeah, I lost $5,000 just like dip buying here, cutting it, dip buying again, cutting it, dip buying again, cutting it. What put the icing on the cake on this ticker was that I dip bought it again one more time, and then this last red candle right here, right at 10:55, I sold it one more time. I faked myself out again, and before you know it, freaking 15 like red or green candles in a row to start the bounce kicks in. And again, I remember telling myself like 150s, 160s, which is where it went. Would have made back my loss at least. Would have been breaking on the trade if I just held this last attempt. Again, it happens. As you can see here, this trend of the next 3 weeks after the first week is me just psyching myself out. Losing $5,000 on dip buy isn't the worst. As you know, I've had my worst dip buy ever of MMNFF, where I lost like 90 grand, and that was because I just did not follow my rules. What's good about this is that I lost $5,000 because I was cutting it, because I was playing it safe, because I just was not holding and hoping. Because if I was holding and hoping, I would be down a lot more than $5,000 had I just never cut these first few times. So glad to be cutting, glad to be following my rules again on dip buys. It just land that once it actually happened, I wasn't there. Something to adapt for and look for in the future, as bounces are much more fake outs, much more grinding kind of bounces. Not the quick like get the turn and immediately sell the pop kind of bounce. That hasn't been happening in this market, at least for now. They'll come back. They'll always come back but it kind of ebbs and flows. Right now we're dealing with much more grinding, slower bounces, a lot of fake out bounces. And hopefully the next market we'll be in or the next change, it'll go back to the smooth bounces. I think you should learn how to trade both. I just haven't seen these kind of bounces in a long time, so I have to readapt, readjust, and go from there. So that was week 3. Again, not too eventful. This is when I then went out to Austin, Texas to see Jack, Matt, Huddy. Sykes was there for a little bit. Had a little mini like trader meetup, which is really, really cool. Really nice. Love always seeing those guys. Traded from the stock trade office, which is really, really sick as well. So that was then week 4. If we go to the next trade, which was CGXEF. CGXEF was, again, a beautiful daily chart. these 5 greenies in a row, which is absolutely gorgeous. Lower volume though, 1 to 2 million shares is not the most. I would really prefer something more along the lines of like 5 to 10. But again, 1 to 2 million is tradable for me, so I was considering to short a first red day. Um, this is one of the trades where I actually just got lucky. If you've watched my recaps over the past few months or years, I talk about some trades where I just don't get filled. Right, it would have been a great big win, it would have been a huge gain, but I just didn't get filled for whatever reason. That happened a couple of times to me. I think back in like March or April. Um, but this time, this was the opposite. This time, I had a huge win because I got just a amazing fill. Right, like it just you're kind of on both sides of the hand sometimes. Sometimes you just don't get any fills. Other times you get amazing fills. And so that was one of these where because it's more liquid, like you can clearly see when it's not panicking or spiking. I mean, the liquidity is pretty bad. But out the open, I mean, I got a beautiful fill at 211. I mean, almost all my shares, almost full size 211. And before you know it, not even 10 seconds later, I'm up well over 20 cents a share. And I think I'll look at my trades here. Yeah, you can see this here. So just got a beautiful lucky fill. And before you know it, I'm covering these pieces, made 5 grand, very quick, 5 grand for the first like 10 minutes of the market open. So super, super sick. Like it would not have happened if I knock out those fills. Yes, it did bounce, but it was pretty illiquid. This bounce, I don't know if I would have gotten the same size sitting on the ask up here. Whereas in this panic, I was hitting the bid and got 211, 210. So just really, really cool to get that kind of fill and get that kind of quick profit. To close out the last final week, kind of almost into July, actually, this trade ended up turning out to be this day here, was LWLG. So here we are. Similar to CGXEF, where it was just a little more liquid. Again, only 1 to 2 million shares per day. But again, it was higher price, so it was a little bit better. Huge, huge runner. I mean, massive supernova. What was tough is that because it was a liquid, there was a lot of slippage. And because it was a liquid, it didn't take much volume to potentially stop you out of a trade. And so that really shook me and a lot of traders up. I did a pretty good job on the front side. I didn't take too many losses. I mean, technically, from my broker trading, I didn't take any losses, but I did take losses on the intraday level. Let me look at the charts here, because I always forget. I actually went into pretty good detail about this trade on a webinar I gave with the Breakdowns and Breakdowns chat. I'll leave a link in the description if you want to join that. If you have X stock to trade, you can join the chat with Jack and I. And I just did a webinar, I think, 2 or 3 days ago. Really went into thesis about this trade before it actually dumped. So I went over this trade like this day without even knowing this day happened, and I pretty much nailed it. So that was pretty sweet to see it. Not in hindsight, like actually call it out before it happens, but essentially it goes red. So I want to get short. I want to see how it pulls. Finally, it actually held. Most days if we go back previously, it wouldn't hold green or it wouldn't hold red. It would go red, come back, go red, come back, go red, come back. So, me taking a starter short on red, I had a kind of a thesis like, okay, I'm prepared for it to come back. But when it didn't, right, when we kind of held down here longer than I expected and we kind of failed this bounce, so I added, because I'm like, what if this is actually it, right? What if this actually does die and doesn't come back? I want to have a little more size. So I kind of completed my starter size because this was a partial fill here. Unfortunately, the volume just disappears, like I mentioned, and we just come right back. And as you can see, this is when volume comes in because all this spiking right here is probably shorts covering. This was me trying to cover. Like I tried to cover over 16, could not get it. Waited for this dip. Unfortunately, I should have covered this dip, but then I started thinking to myself like, oh, we're going to fail. We're going to come back red. We don't, so I cover. But then eventually, like 30 minutes later, we actually do start failing again. And now you might ask, like, what, Kyle, why would you reshort going red if it can just go back green? Because same thing here. Like, same thing on this day. We almost the same thing. We go red, come back green, go red, but then come back green again. So what makes me think that this time is any different? Well, at some point it ends, right? So I don't want to subscribe to the idea of like just keep taking attempts over and over again, no matter how long it takes. But at some point, like you almost can see the daily chart before it falls apart. You can see how much more volatile it gets, right? And, this isn't that this kind of pull isn't that big because you see it pull just as big here. You see it pull kind of just as big here. it's not that extreme. So it didn't surprise me that this came back. But when you pull out like this and you start looking another day, these pulls, the range in these pulls are way bigger than we've ever seen. And so when you start seeing that, that's usually the sign of a top. Like that's not healthy price action when you see something so massive and so volatile. So when we came back, I felt pretty convicted because now we're like $2 a share off its highs. We've had a nice double top here. So coming back red, I felt pretty convicted at this point. Like this should be it, right? If there's a time for it to be it, this is likely it. And the longer we go into the afternoon, I felt much more confident. As you can see, I start adding more and more, thinking we're going to break low a day, because this is now the longest time we've held red in the day, right? By far, we've been red the most out of any day, any time frame in the run up. Fortunately, late day, again, like I said, very little volume is needed to bring this back. And so you do see me cover a little bit. I actually tried to cover much, much more. Luckily, in the tape, you can't see it here, but in the level 2, 15 kept selling. Like you see a couple prints above that, but those prints were happening way above the best ask. There was an ask just staying at 15, staying at 15, staying at 15. It was like someone was selling a lot at 15, at least for how much volume was going through. And so I saw that. I was like, someone's selling. Like this isn't doing this move, right? This isn't the same move. So I canceled my order. I filled like a couple thousand shares. I immediately reshorted like half those shares back here. And I thought to myself, this is going to hold red. Like this is a huge stuff. Now, granted, we do come back again. So this scared me out again. I was like, not scared me out, but I had my finger on the trigger to stop out because I was like, this thing is such a pain in the ass. Like this is ridiculous. But part of me wanted to hold for wanted to have some shares at risk at the all-time highs of 17, just because it's like, I've seen too many charts of these that like, unless they break their highs, I gotta have some short. I gotta stay convicted. I gotta stay with my thesis. And my thesis was like, if this closes red, I want to swing overnight and I want to cover at least $10. Like I think this thing is so extended that $10 should at least be the level it gets to. Now, as in AMC, as in TRCH, the trend that's going on, you can probably guess I did not cover at $10. We go here. The next day here as a short over the day after I held overnight. Panning's out the open, covered a little bit, very small piece here, cover the rest into these pieces, and I was all out by like 11. And then you see it go below 10. And 10 was like the low, which is really cool to see that like my thesis was spot on again. 10 was the low, same thing as AMC, like 40 was the low. I just this month after the whole month, like I have not had conviction to stick through my thesis the entire time. And partially why I think that happened on LWLG is because it was so liquid, right, on the front side, because it took such little volume to kind of spike it. I had pretty big size to the point where I thought to myself, like, if this bottoms, whenever this bottoms, there won't be enough volume for me to get out at a safe price, I should say. I don't want to. The last thing I want to do was squeeze myself higher into the bounce because I have too much size. So I started covering into pieces into the panic because I thought to myself, like, I do not want to be caught with too much size at too low. The unfortunate part is that once the dump happened, a lot of volume started coming in, like more volume than it ever had in the run up because a lot of people were dumping, a lot of people were selling, and that created a lot of activity. So in hindsight, I could have easily covered all my shares at $10. Like I really could have just held it all. Was I going to know that? It's again, I'm speaking in hindsight, so it's tough. But again, the fact that I had my thesis for it to go to 10 before that happened, I really wish I did have some size here. But all in all, from the losses I took here and here to then make money back on this profit, I did net 10 grand. So not knocking 10 grand, that's a great profit. The only reason why I am happy with the thesis, but again, disappointed with the trade management is that this red day back in early June, like this right here, this small little run up, and this red day, I made 10 grand on this day or this move. So to make 10 grand on this such small supernova move and only make 10 grand on even a way bigger, way more ideal supernova with way more volume, a little disappointing, right? And again, it's not in terms of money, like making 10 grand on 2 grades. I'll take 10 grand every single time. I'll take 10 grand to any loser because it was a loser on the top day. But when you look at like in terms of a point system, when you look at terms of, again, pushing it when it's really ideal, right? Pushing it when you have the best of the best kind of odds and trade plan, just felt like I should have made more, in terms of like a point system. I don't like to look at dollars as points, but I hope you get what I'm trying to say is that like I want to make more because the opportunity is there. The opportunity was not like I was very stoked to make 10 grand on this day or on this move because like I pushed it as hard as I could. Like I literally couldn't have timed it and played it any better. Here I could have played it much, much better, and it could have been an easily like 30, 40, maybe even 50 grand win, especially if I had been more convicted and that, or even not even more convicted, just reshorted on this day, seeing that it was holding red on the day and made some more money on this fade too. So again, not knocking it, but just it's how I got here, right? I didn't get to $2.1 million of profits by making money and being like, oh, everything's good. Like, don't need to make any improvements. I made money. Who cares? That's not how I got here, right? I got here that win or lose, I'm gonna be very hypercritical, very maybe even too hard on myself to really improve, really develop my skills, and be better next time. So I definitely don't want to come across and take it the wrong way of like this selfish bastard like make 10 grand and is upset about it. Definitely not upset about it. Like way better than losing, of course. But in the terms of the game of being a trader and improving as a trader, there's improvements to be made. So that's the point I want to make there. But yeah, I mean that's the month. I ended up closing out, just under 250K, which is really really cool. I think it's like my third best month now. Having a good start to July of 12 grand after just 2 days, so that's cool as well. Um, and again, in terms of July, I think I am going to have 3 vacations. I'm going to be gone, not be gone, but I'm going, one place the first week. I'm going to another place the third week. I think I might be going someplace the first week of, or I'm probably going somewhere the first or second week of August. So this next 40, 30, 45 days is going to be quite hectic. Um, Getting a new car, moving to a new place, in the same time frame. So, you know, the summer months are usually the slowest, and my schedule is like the most hectic it's ever been. So if July doesn't come out an amazing month, it's even a red, right? If I even have my first red month in like years, I am going to be totally accepting of that. I really don't have any expectations about how the month's going to go because it might be slower because of my huge schedule. Just taking it day by day, trade by trade, um, and yeah, trading well and constantly improving, like I had mentioned. So yeah, thanks so much for watching, guys. I will see you guys next month. Maybe I'll make a video in between then. I'll try to. With a busy schedule, it'll be tough, but yeah, thanks so much for watching, guys. I will see you next time.